Ladies and gentlemen, welcome back to the channel. This could be one of the biggest opportunities in Tesla stock that we will have in 2025. And here in this video, I will explain exactly why that is and why we could be setting up for a nice move higher after Trump is inaugurated on January 20th. Now, I know Trump is kind of like a trigger for some people, but it is what it is. Regardless of how you feel about the guy, we're setting up nicely, and that's according to Fundstrat and some other institutional investors that are starting to point out the same thing that I am going to in this video. I'm just going to point it out a lot faster than the rest of Wall Street is. I'm giving you like a 2-week heads up on what the rest of Wall Street is going to say 2 weeks from now. Mark Newton, he is the chief technical strategist at Fundstrat. Tom Lee works at Fundstrat. You probably know that guy at least. But Mark Newton's like the second most important guy that works at Fundstrat, okay? He says the flip side to all this internal deterioration is that sentiment has begun to retreat pretty sharply in recent weeks as the media's narrative around Trump's tariffs being inflationary becomes consensus. AAII Bulls Bears is now down to neutral, a far cry for most of 2024. When the media says something's a surety, it's almost always wise to bet against that. Okay, so basically what he's saying here and what I'm about to say next, long story short, is Wall Street has gotten probably too fearful on one, tariffs, on what tariff policy could look like, and number two, the effect of that tariff policy on inflation. Now, the data that came out today was not exactly great, okay? Specifically, the services PMI, the services prices that came in way hotter than expected, okay? Now, this could be kind of one-off in nature. Not always when you get a rise in services prices do you therefore see a rise in inflation, but it does happen sometimes, right? From December, let's say 2023, the last time we seen a rise like this, you went from 56.7 to 64 in January. That was a big jump. And you did have your bout of inflation in early 2024. And then it came right back down, and then inflation kind of continued to fall throughout the rest of the year. So sometimes these things do go hand in hand, if you will, but this is not even the largest jump we've seen. The jump from December to January of 2023 through 2024 was larger than the one that we just seen on a month-over-month basis. Now, what the ISM data really is, it is a survey. So it's not even hard data. It's not like we actually got higher inflation data today. It's just telling you that, you know, purchasing and supply executives nationwide, in the ISM, you know, words here, executives expect higher prices. So expecting higher prices sometimes turns into higher prices, but expecting higher prices does not necessarily translate into higher prices because the expectation of these higher prices is tariffs, right? That tariffs are going to introduce higher inflation. Now, here's the situation though. From a tariffs perspective, we've gotten used to, or I think the consensus we could say has gotten a little too negative on tariffs. That tariffs could be 50% or 100% like they were promised on the campaign trail. Whereas a blanket, let's say 10% tariff would not be nearly as bad as I think what the consensus is right now. So in other words, we are expecting a really bad outcome, and the outcome may be bad still. Tariffs are not good in any form, but it may not be as bad as what is feared. And that would be a buying opportunity. That would be a moment in which I think the markets would rally a lot. And Tesla, being a very sensitive stock, being a stock with a high beta, it tends to really amplify whatever happens to the indexes, would, in that scenario, if I'm correct and we get smaller tariffs than Wall Street is currently expecting, would be able to benefit from that a lot. You can kind of think about this like an earnings report as well, if none of that made sense. If there's a company that everyone expects to do like really bad, like edge of bankruptcy bad, okay, and they come in and it's just bad, like maybe not edge of bankruptcy bad, but it's still bad, but maybe it's a little bit better than expected, that stock probably will do very well, okay, following this mythical earnings report. That's kind of how the markets as a whole are setting up right now. Now, we also have, as I've reported before many times here on this channel, the percent of stocks trading above their 50-day moving average at 36.15%. That means 64% of stocks are in a pretty severe downtrend, okay? Normally, if you are in a severe downtrend in 65% of markets, that is an opportunity to go shopping. Anytime during a bull market that you are this negative, it is an opportunity, historically speaking, that you want to buy the crap out of markets. Okay. Now, what's interesting about this time around is normally when markets are this bearish and 65% of stocks are in an active downtrend, usually the headline S&P is down a lot more than what it is currently, right? You're only down about 2.5% from all-time highs. Normally, when markets are this bearish, you're down a lot more than that on the headline S&P. Big tech has kind of artificially held things up. The RSP looks a little bit more normal here, right? You're down 6% from your all-time high on the RSP. Okay, that's probably where the S&P should be right now. I'm not gonna, pull hairs on that. But the internals of our markets are weak. They've been weak for a while. Now, especially as we get into around the inauguration, around January 20th, I think it's going to be a situation where the actual tariff outcome is not as bad as what is feared. And that is going to be a buying opportunity. Mix that with, I would hope, inflation that does not continue to ramp up. If inflation ramps up, that is a problem. And I think that would kind of, not allow the Trump regime or Trump administration to enact more aggressive tariffs. So it could be kind of a trade-off here. We'll have to see. But especially as tax loss harvesters, from a tactical perspective, are now able to rebuy some of the stocks that they had tax loss harvested in December, that should allow for a reacceleration again in our markets. And if we do get that kind of reacceleration again, I think that will be good for Tesla stock. And that is right now why I think you want to lean into the negativity in markets. I don't think you want to run and head for the hills and sell everything right now, because markets are in a negative kind of state of mind, right? Sentiment, very negative across the board. Positioning is very negative. Like Mark Newton said, when you look at the AI investor sentiment survey, only 35.4% of investors are bullish, 30.4% are neutral, and 34.2% are bearish. I mean, yeah, when you're getting to these levels, that's pretty bad, right? 35.4% of investors are bullish. That is 2% below the historical average for bulls. Normally, in a bull market, you do not get below the historical average. Normally, you're in the 40s, okay? Sometimes even in the low 50s for the amount of people that are bullish. So you're very low here as far as sentiment, okay? And when you look at CNN's Fear and Greed Index, you're coming in today at 38, which I don't think this number is truly that accurate, because yesterday you were at 36 and markets got pretty hammered today. So I think you're probably going to reset even lower than that, probably down to 34-ish if I were to imagine. And yeah, you're still solidly in fear. which normally you want to buy fear in a bull market. I just think at this point, some of the fears about tariffs are really getting overblown at this point. I think the fear is larger than what we're actually going to see. Or in other words, you know, the bark of the dog is scarier than the actual dog itself, right? And that's going to set up for an opportunity in Tesla stock, especially considering what Tesla has going for them in 2025. I mean, NVIDIA's CEO says the autonomous vehicle revolution has arrived, saying it could be the first multi-trillion-dollar a year industry. Okay, that is a very big statement. And MKBHD ranks Tesla's FSD as the -- best assisted driving software, better than Mercedes, than Cruise, than all of your other softwares, which we already kind of knew that, but it's, again, reiteration. Even news today, Tesla has a new patent. Maybe it's for robotaxi. It is for a system detection and proper usage of a seatbelt of a vehicle, including a seatbelt, a vehicle seat having a seat cushion and a seat back. So apparently there's better monitoring of seatbelt activity in the back of or in the cyber cab. In other words, we're getting ready for the launch of the robotaxi. Okay, you don't want to bet against that. Okay, now Tesla has rallied quite a bit recently, at least from the election. I think you're in that consolidation phase right now where you're consolidating those gains, and after this round of fear goes away, probably after the inauguration, after we actually get a small tariff enacted, then that's going to be Tesla's opportunity to rip dramatically higher from here. That is my personal expectation. Now, short sellers are also, doubling down on their short positions. Okay, they're getting pretty extreme there, and we'll look at that here now. I think they're going to be vulnerable to some pretty big losses, thus probably start to cover on their short positions over the next couple of months. You have 2.88% short interest of free float, $33.1 billion sold short in Tesla, totaling a little over 80 million shares that are sold short. Even on the day today, you had 343,000 shares that were sold short. I think people have gotten too negative on Tesla. Just because the stock has went higher, I think that's justifiable. I think Tesla stock could go a lot higher. Some on Wall Street obviously disagree with that, and they're putting their money where their mouth is. If they are proven wrong and Tesla stock continues to go higher, there's going to be a lot of losses that start to pile up, especially if we consider the positives that could happen next year. What if inflation is not the big issue that some people think it's going to be? What if inflation surprises to the downside? What if, as Trump says here, he said today, that interest rates are far too high? What if rates come down more than expected, coupled with lower than expected inflation? Who do you think is going to benefit from that the most? From a company perspective, it's obviously Tesla, because they're very interest rate sensitive, and rates coming down with a low inflation will allow people to look further out on Tesla's growth curve and give Tesla more of that valuation up front. Okay, the reason why Tesla was at all-time highs in 2021 was not necessarily because of the great things that Tesla was doing at the time. It was really the expectation, the pull forward of what Tesla was going to do in the future that was happening in real time in 2021. Okay, because rates were low and there was really nowhere else that people could go to get a super safe investment that yielded anything close to what the stock market was doing. So in other words, interest rates are a discounting mechanism. If 10-year treasury yields are close to 5% as they are today, then it looks a little different. Okay, the risk reward looks different investing in equities, or especially investing in something risky like Tesla, when you can just sit back and get a 50% yield over the course of 10 years and not risk any of your premium. When 10-year treasury yields, let's say, fall to 2% or 2.5%, that looks a lot different. It makes more sense to go out and take a little bit more risk, and to maybe look ahead to what Tesla could do in 2027 or 2028 to justify valuations in real time. So I know that sounds very complicated, but the long story short is Tesla will benefit a lot. I would say more than the rest of the markets if tariffs are smaller than expected, which at this point, I think that's almost a guarantee. That's going to be a positive catalyst for markets, I believe, around inauguration, if not into late January, into February. And Tesla will also be, I think, the one to benefit the most from inflation that I think will come in to the downside next year. I don't think we're going to be surprised at the upside for inflation, and thus a Fed that is able to cut rates more than expected. I think in those three scenarios, Tesla is really going to benefit. Couple that with Tesla stock that has fallen from, call it $490 down to $395. So you're getting over 23% discount on Tesla from the all-time highs, and from a market that is overall very weak. I don't know who the hell said that markets were optimistic right now or too bullish. And I know some still on Wall Street are saying expectations are too high for 2025. That to me sounds like complete bullshit, okay? People are negative. People are the most negative I've seen them in a long time as far as positioning and on equities. And again, when people are this negative, you want to be buying something. Question is, where do you want to be buying? I think AI, specifically AI appliers, is where you want to be. Okay, AI appliers could be software stocks. They could be data centers. They could be something like Tesla that is doing, I think Tesla is like the holy grail of AI appliers, right? Full self-driving cars, as Tim Cook said in 2017, it was the holy grail of AI. Okay, there's no bigger AI project than full self-driving cars, as that's what Tim Cook, Apple's CEO, said. There's nothing bigger than that. Okay, Tesla stock will be rewarded for that and the progress that they will make on full self-driving in 2025. But for periods and moments, there will be extreme volatility. There will be moments of uncertainty and doubt, especially with the NHTSA's report today of a probe of 2.6 million Tesla vehicles following Actually Smart Summon. Let me find this. Sawyer Merritt shared this. Yeah, it says here that NHTSA said today it has opened a probe into 2.6 million Tesla vehicles in the U.S. over reports of crashes involving a feature that allows users to move their cars remotely. Like anything to tear Tesla down is what they try. But Tesla always comes back from things like this, and nothing ever seems to happen to Tesla. Okay, I don't think this is another one of those moments that we're going to look back and say, oh yeah, the NHTSA was a warning sign. We should have gotten out of Tesla stock. And that's what it feels like a lot of people are doing today. Now, if the markets were super bullish and nobody was expecting tariffs and nobody was expecting inflation and blah, 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 if the markets were flipped, compared to where they are today, then I would say maybe it's a time to be a little bit nervous, because there's a lot more that could go wrong that then could go right? But right now, it feels like there's a lot more that's going to go right for markets than go wrong for markets in 2025, specifically around Trump policies. I think a lot of the sell down that we've seen in markets in the last couple of weeks, especially again in something like the RSP, has to do with tariffs and inflation expectations. And they're kind of going hand in hand because people think higher tariffs mean higher inflation. And that could be the case. But I think the sentiment is too far swayed on the bearish side. And unless this is a start or the start of a new bear market, it pays to buy when people are this negative. And I think Tesla is probably the best area to be buying right now for the risk reward standpoint. I mean, Tesla is a very well established company that has a lot of potential upside, like massive potential upside. You will not find this kind of upside in any other big tech name, including Nvidia, Apple, Google, Amazon, Netflix. None of them have the upside potential as Tesla. But that does mean Tesla has a lot more volatility than those other stocks. And we're currently in that round of volatility right now. Now, from a technical perspective, I think you want to watch this trend line, see if we find support here. If Tesla continues to fall, that's going to be about 387 or so. If we get back down to this trend line, that's where you would want to see some demand coming in, a bit of a bounce. It does look like Tesla got a lot of support around the low 390s today, so that was good to see. And you really want to get above that 20-day moving average. You found some resistance there yesterday. That is currently at about $425 per share. A break above that 20-day moving average, when it happens, will be a pretty good sign of a larger rally. I mean, yesterday you didn't break above that for more than a couple minutes and you were rejected again. Once we get a clean break of that, that sets us up for maybe even a test of new all-time highs. Clearly, the next big catalyst for Tesla stock, for those of you guys that are wondering when the next catalyst will come, it is Tesla earnings. Not Tesla's numbers, not the actual earnings, but the commentary from Elon Musk, the conference call. The big upside catalyst for Tesla would be with a more clarity on the robotaxi network, right? Make it easier for analysts to do their job and to model out what Tesla's robotaxi could look like. But it's also raising the guidance. Instead of 2 states next year or this year, I'm still in 2024, okay? So pardon that. To actually raise the guidance from not just California and Texas to launch robotaxi this year, but for a couple more states to potentially launch robotaxi. That will be the big catalyst for Tesla, and the lower priced Tesla models actually starting production here in the next couple of months, right? Those are the 2 big catalysts for Tesla stock coming on Tesla's earnings. And I think that's going to drive the big move, okay? If Tesla flops on the earnings call, the stock's going to fall a lot more. If Tesla gives us what we want on the earnings call, I think there's going to be a lot more upside. Between now and then, you're kind of in a waiting period. It feels like the inauguration is going to be another big catalyst as well that I think markets will actually buy that event. It feels like you've seen kind of a sell the rumor with the inauguration, with tariffs, with Trump policies. And you could get an actual buy the news event when the inauguration does happen. So not a guarantee, obviously not financial advice, but that's kind of what I'm looking forward to right now, and why I'm actually actively buying more Tesla here, why I'm actively going out and buying stocks on our markets. Whereas a lot of people right now want to take this wait and see approach, which is fine. I just think you want to take advantage of the bearishness when you get it. And markets are very bearish right now. So let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.